Hello everyone, this is Jen Han and welcome to my channel, the channel that teaches you about finance and investment in an easy way. And don't forget to hit the subscribe button. What's with the GameStop all in the news? Why was the Reddit community pushing the stock price up from $10 to $500? This is because they want to go against the hedge funds that short the GameStop. Wait, what is short? Short selling, in investment terms, is when someone takes profit when the stock price drops. Why would investors do short selling? Normally there are two reasons. First, the company has lost its fundamentals and no longer generates good profits for the shareholders. Secondly, as a hedging tool against the downside risk. For example, if you have a feeling that a bear market is coming, you may do short selling to protect gains or mitigate losses in your portfolio. How short sell works? In short selling, an investor A borrows some shares from a broker B, let's say 100 shares at $10. Then, he sells these 100 shares to a person C. Because it is borrowed shares, A must return the same number of shares to B at a later time. Once the stock price drops, let's say to $6, A will then buy the same amount of shares that he owes to the broker B. But now he is buying the shares at a lower price. Hence, A earns the profit of $10 minus $6 times 100, so it's equivalent to $400 in this short selling. Remember, if you short a stock that pays a dividend, you must pay that dividend back to the broker, as if you are owning the stock. Of course, if there is no dividend, there is no concern. Who are these hedge funds? Hedge funds are pooled funds that aggregate capital from many individual investors to invest as one giant portfolio and use different strategies to earn active returns. Pension plans, which invest assets on behalf of workers like teachers and police officers, may hold big positions in these hedge funds too. Why the hedge funds are shorting GameStop? GameStop is a company where its main business model is by selling video games and gaming devices through physical shops. Their business model is outdated because trends have changed and people are buying video games through online platforms such as Steam or purchase subscription services in Stadia, similar to how Netflix works. This shows that GameStop as a company has no more fundamentals, which means that the company is unable to generate good profits anymore unless GameStop finds a different way to sell its products. The second reason is because of the low interest rate of nearly zero in the US. So the hedge fund managers have no choice but to take higher risks to generate returns for their customers. Because short selling is all about hoping the stock price to fall, this is considered unethical by many investors who are looking for capital appreciation in the long run. So these Reddit warriors hope to take down these hedge funds and teach them a lesson. To take down these hedge funds, one of the ways is to push the GameStop stock price up. These Reddit warriors, which are individual investors like you and me, fork out large sums of money, buying the stock at $300 or even $400 to push the price of the stock up. When the stock price goes up, the hedge funds have to buy the stocks at a higher price and return the higher priced stocks to the broker. In that case, the hedge funds lose the money from the difference of the price they borrowed the stocks and the higher price they purchased them at. Why doesn't the hedge fund just hold on to the stocks until they do fall? Their broker won't let them. After the hedge fund has lost a certain amount of money, the broker can demand the hedge fund to sell their stocks and repay the broker, or place more money in their account with the broker. This is to cover the loss they are potentially going to have when they purchase the higher priced stock. It is the way the broker protects itself. So, the hedge fund is forced to place more money in the broker's account. This imposes higher risk and danger to the hedge fund. Also, a lot of these buys in GameStop's stock were being executed in Robinhood trading platform. In Robinhood, a lot of small investors in Reddit can buy a fraction of a GameStop share with zero commission. Hence, they are trading with no additional service charges. Normally, brokers will charge a certain amount of brokerage fee for every trading in a stock. There is no free lunch in this world, and Robinhood is not charging the customers any fee. How are they making money? They are not a charitable organization. And who are paying the bills so that the Reddit warriors are trading for free? Well, The people who are paying the bills are some of these hedge funds that short these stocks. The hedge funds will say to Robinhood, "We are your actual customers here. You are screwing us here. You better stop this buying on GameStop or we don't pay for these orders anymore." If the hedge funds stop paying for Robinhood, Robinhood has to pay somebody else to execute the trades. But since they are not charging the customers anything, they are losing money every trade and eventually run out of money. So they had to halt the trading to stop the bleeding. And this caused many of the Reddit warriors to switch to another platform such as Public and Weibo. The war between the hedge funds and Reddit warriors, who will win and who will run out of money first? The answer is, either way, the uneducated investors in the Reddit community will lose eventually. If the hedge fund loses the fight, all their existing customers' retirement funds go bust, and innocent people like the teachers, police officers who had placed their money in this hedge fund suffer for no reason. The Reddit community, unknowingly that their pension funds have already invested in this hedge fund, also suffer in this war. If the Reddit warriors run out of money, the stock price will start to crash because those investors and mutual funds who had earlier bought at a lower price will have the opportunity to sell at a higher price. In Malaysia, some investors are inspired by these Reddit warriors and decided to gang up against the short sellers by calling on retail investors to buy Top Glove shares to jack up the share price. However, there are 3 reasons why retail investors are unable to push the Top Glove stock price up just like GameStop. Firstly, many long-only institutional funds are cutting their positions in Top Glove as they think that the stock is overvalued and also the positive news on COVID-19 vaccinations. Secondly, Top Glove has a free float of 3.95 billion of shares, whereas GameStop has barely 50.7 million shares. Hence, it is much easier to push the price of GameStop than Top Glove because of its smaller number of shares available on the open market. Thirdly, the net short position of hedge funds at GameStop was as high as 138%, meaning the stock was shorted more than its size of share capital. However, on Bursa, the Malaysia regulator has imposed a 4% limit on the net short position of each approved security that is allowed for short selling. The net short position at Top Glove was 2.92% of its share capital as at January 27. This story is an excellent example of the vital importance of financial education. Everyone wants the shortcut by following the crowd. The problem is, shortcuts get you burned. Rather than looking for the high-risk shortcut, take some time to learn about investing before you jump in. I hope you enjoyed the video and do hit the subscribe button if you wish to see more of these videos. Do comment below if you have any thoughts. See you!